As we enter the new financial year, starting 1 July 2024, what you'll notice as an employer is that the payroll has changed. And that is because of two things. So the first one is that the tax rates for individuals has changed, and that's for the better. So all employees or all individuals that are earning money this year will pay less tax than the prior year if they earned the exact same amount of money. Something else that you may have noticed that has changed on your payroll would be the superannuation. The super guarantee rate has gone from 11% to 11.5%, so keep that in mind. So how this affects you as a business owner is in two ways. So the first with the wages is that for the exact same wage, you will pay your employees a little bit more week to week. So each employee will get a little bit more cash in hand, which is a great thing. And then at the end of the quarter or end of the month, when you have to pay your PAYG withholding to the government, those amounts should be slightly less. So overall, for the exact same wage, you'll pay the same amount, but your cash outflows will change slightly. So more payments week to week to your staff and a little bit less on your BASs. The other change with the superannuation is that each quarter, when you pay your superannuation or however frequently you do pay, those amounts should be slightly higher if you're paying the exact same wage, because you were paying an extra 0.5% superannuation this year. So overall, your staff costs should increase a tiny bit, provided the staff levels or the wages are exactly the same as the year before. Now, with the tax rate changes, before I get into them, I'd like to go through some of the historic tax rates. So I went and looked at the tax rates from the year 2003, which is the year when I first started working in the accounting industry. And the top marginal tax rate of 47% kicked in at just $60,000 back then. So now the top tax marginal rate now starts at 190,000. So there's been sort of like a 3 times increase in when that top rate kicks in. So that was quite interesting. So from that, I looked even further back as far as 1984, which was the records I found. So that's 40 years ago. The top marginal tax rate was actually 60% for individuals, and that kicked in at just under 36,000. So the rate with the top of the threshold now at 190,000, that's 5 times higher than what it was 40 years ago, which I thought was quite interesting. And the tax rate was 60% back then, which is yeah, hard to fathom. So all of us complaining at 45%, if we think back then, things were a little bit harder for some people paying tax at those crazy rates. So let's get into the new tax rates. The 18,200 tax-free threshold, that still remains the same. And then from 18,200 up to 45,000, that tax rate is now 16%. So that's a drop from 19%. So that's a 3% saving there, which is excellent. And then from 45,000, the top of that tax bracket is now 135,000. So that's increased from 120,000, which is also good. And that rate has dropped from 32.5% down to 30%. So another good saving there. And the majority of Australians will probably fall in that sort of tax bracket. And then from 135 up to 190,000, now the tax bracket there is still 37%. And then from 190, it is still 45%. So while those rates have not changed, the brackets have changed slightly. So every individual earning more than 18,200 should be better off from a tax perspective in this upcoming financial year. So if you have any questions about how all this works and how it's going to affect you or your business, then certainly get in touch with us. We're more than happy to help.